Good morning, good afternoon, good evening, traders. I hope you're exceedingly well. I wanted to make, I don't want to call it an emergency video. I guess it's not an emergency if you know how to read order flow and you know how to read CVD. So I'm seeing a very similar situation play out from yesterday, where we had a short squeeze, and I had the video up yesterday. So if you haven't seen that video, go check that video out. I'll put a link up at the top. But I'm seeing almost an identical thing playing out. So I'm still in my long trade from yesterday. I took the trade from 18,550. I actually got in on this candle right here. On the retrace, I saw the short squeeze coming in, saw the divergences, I saw the trap shorts, and I set my limit order right there and literally just got in within about $2 or $3. So I'm still holding that trade. And I actually put when I saw it coming up and rejecting up at this fib golden pocket right here and close to the value area high of the range, I thought I'm going to put my stops in profit. So what I did was I put my stops right under this previous day value area low. So I put it at 19,237. And as you can see, we wicked right down all the way to 254, and we've come in. This weekly level has actually acted as support. So, but what I'm seeing is this. I'm seeing once again as CVD, cumulative volume delta, is making lower lows, price is making higher lows. Again, what it means is that people are market shorting, and generally the smaller participants in the market short via market, or they enter the trades via a market order. Whereas what happens is that the whales, or the bigger participants, enter the market with limit orders, and we can't see that in the CVD. So CVD showing us most of the participants are shorting, but price has been held up by a bigger player. This is bullish CVD divergence. The second fact is that it's right on a major level. That's a very, very major level of interest. Now, of course, this idea can be invalidated if we come down and break down right below this weekly level and that NPOC. So in other words, if we come down, break down, retest this as resistance and come down. So if that does happen, what we've got to realize is that we've got a range right here. Have a look here. Right here, we break down back under this weekly. There's my range there, and there's my range there. So if we get a back test of this weekly level, possible that a short is on and trade this range until it breaks. Very, very simple. But let me show you what the order flow is showing me. So if I go into my order flow, again, here's my higher low on price, and CVD clearly making a lower low. So, and what's interesting as well is that open interest is starting to increase here. But let's talk you through the last couple of candles. You can see on this half an hour candle at 8 a.m. South African time, we had 1.85 million candles, or 1.85 million contracts opening at the low. And right now we can see there's a move downwards. So let's see if this is going to break down or if we're going to start seeing volume turning up. But you can see here at the bid, which is all the shorting, 3.19 million, 7.39, 19 million. Then all of a sudden we had 7 million and we had a positive delta. Right now, again, we've got a lot of shorts opening at the bottom. This does mean that we could break down. Again, I said that invalidation is below the NPOC. Or the previous day value area low and that weekly level. So what we need to see for a short squeeze to happen is we need to see big demand coming up. So this might be an opportunity to get in, but once again, tight stop losses and make sure your risk management is very, very on par. Let's look at what the TPO charts are showing us right now. So right now, we've actually had a poor low here, and that normally means that we'll have a run up to the top of possibly to the day's value area high, which is at 19,540, if this area holds. And we've got a little shelf here, which is also a double bottom. That could be an indicator that we are actually going to be moving up. So we've actually just had that poor low forming. So if this E level holds at 19,272, I really think that we are in for a pretty big short squeeze. So let's look at some of the levels that we could expect if we break up above here. Now, obviously, we've got resistance here at this fib golden pocket and the range value area high. But the areas that I'm looking at, if we do break out, is this NPOC. It's a previous, I think it's from 2 days ago, a naked POC, 20,200, and we have a daily level right at the top there. Are we going to test these highs? Possibly not, but anything is possible these days. We've had some hectic news that there's sabotage on the Nord Stream gas pipeline. That could be a factor that we could consider, but I prefer to look at the charts and go with what the charts are telling us. So let's look at what the ES is doing, because the ES is Bitcoin and crypto has been following the traditional markets very, very well. You can see we had a move up there, a move down, and if we get possibly a move up for the ES to that $3,755 area, we're going to see crypto also moving up, possibly breaking up above this monthly level. Obviously, that's a major area of resistance that we could look at. And those are just areas to be aware of. So if we break down back into this area here, let me just draw my parallel channel. Why is it not drawing? I'm drawing the wrong thing. Apologies. There's my parallel channel. We could be trading between this weekly at 19,276 and this daily at 18,447. So do me a favor. If you like this idea, please give it a thumbs up. If you're trading, make sure that you have tight stop losses, good risk management. Of course, this is not financial advice. This is what I'm doing with my trades. I've still got my trade open and I'm hoping to take profits higher. But if I get stopped out at that 19,237 area, I've still got profits booked. So safe trading, and I'll see you next time. A little bit tongue-tied this morning. I need more coffee.